Hi, everyone, and welcome to today's webinar on how to boost your work comp production. My name is Jacob Cole. I'm the marketing coordinator here at CID. Today, Darby Fisher, our work comp underwriter, will be sharing her expertise and giving you the tools, tips, and strategies you need to boost your work comp production. She'll be going over the specific learning objectives in just a second, but before I pass it off to her, I wanted to quickly go over the logistics of this webinar. As you can tell, you're all muted, but there is a chat feature, so you can type your questions in and we'll answer them throughout the webinar. Your voice is important to us and we want to make sure all of your questions are answered, so please feel free to chat them in at any time. And without further ado, I'll pass it off to Darby.
Good morning, everyone. So today our learning objectives are going to be how to manage a worker comp policy seamlessly from quote to renewal, understand some of the common post-binding challenges and how to navigate them effectively, gain strategies for securing new workers' comp business and improving renewal retention. And again, overall theme is exploring what it takes to stay competitive in today's workers' comp market. So we understand that writing work comp coverage has become more challenging for brokers in today's market with stricter underwriting and carrier selectivity, rate pressure, and tougher economic conditions. But within these challenges lies opportunity. By staying proactive, sharpening your market knowledge, and partnering with the right carriers and support teams, you can break through that noise. So successfully managing your workers' comp book as an insurance agent empowers you to build long-term client relationships, drive agency growth through consistent renewals and referrals, and position yourself as a trusted advisor in risk management. So in this webinar today, we're going to explore the power of effectively managing your workers' comp book. Through a case study, we'll walk through the entire process from quoting to renewal, sharing actionable tips, tools, and strategies that will help you boost your workers' comp production, strengthen client retention, and differentiate yourself from another agent in this competitive market. So when it comes to workers' comp, not all premium sizes are created equal. So we want to sharpen our underwriting skills just by briefly going over some of those premium sizes and highlighting which are the most competitive. So small businesses, it's going to be the premium from around $2,000 to $15,000. They're quick to quote and great for building your book volume. Large accounts, those accounts $50,000 and over typically are going to supercharge your premium growth, but demand deep underwriting and risk analysis. And so that competitive edge really lies in the medium-sized businesses, typically $15,000 to $50,000 in premium, as these accounts are going to fly under the radar of the large brokerages. They come with stable loss ratio and typically have favorable mods, opening the door to credits and aggressive carrier pricing. Ultimately, quoting work comp is not just about submitting applications. Brokers who take the time to understand the unique exposures associated with different business sizes and who can package and present risks effectively are going to have significant edge. So proper underwriting, clean submissions, and the ability to tell a story behind the risk are what separate top performers from those who rely solely on volume. So successful strategies for managing your workers' comp book. Effectively managing all aspects of the policy is essential to building a successful book of business. Strengthening your skills in quoting, closing, and binding is essential in the workers' comp insurance market because it helps you remain competitive and responsive. Mastering these core functions starts with a solid understanding of underwriting guidelines across carriers and business sizes. So knowing how to present clean, complete submissions that align with carrier appetites not only increases your quote to bind ratio, but also builds credibility with underwriters. Delivering value-added solutions and competitive premiums, of course, is equally important for driving workers' comp production, both for new business and renewal business. So in a market where pricing is often the primary concern, the ability to differentiate yourself with added services such as safety programs or model analysis, it can be a deciding factor with the client. When you shift the conversation from price alone to long-term risk reduction and the total cost of insurance, you create a lasting value that makes it harder for competitors to unseat you. So finally, in managing policy activity throughout the policy term, including endorsements, audits, and midterm changes, which we're going to be going over, it's a major driver of long-term success. Clients remember how their policies are handled after they bind, and agents who are responsive and proactive during the policy year build trust and loyalty. So ensuring accuracy during audits, catching payroll or operational changes early, and using every touch point as a value opportunity, these are all going to contribute to client satisfaction and retention. And as we walk through the case study, we're going to see how these strategies are applied. Now, before we get into the case study, I want to talk about the points in the process where you might hit a fork in the road, the moments where things can either move slowly or start to fall apart. These are common points where agents may run into issues, and avoiding them can make all the difference in getting deals done efficiently and keeping clients satisfied. So here's a streamlined approach that sets top brokers apart. When you're analyzing the new business, don't just rely on surface level info. Dive into operations, class codes, claims history, and mod trends to help develop competitive, accurate quotes that stand out. When it comes to the bind, meeting all those binding requirements up front, review carrier binding conditions early, and ensure all documentation is satisfied before policy issuance to avoid delays that may cost you the deal. Stay on top of midterm changes once that policy is bound, so payroll shifts, operational changes, or new locations can impact premium and coverage. So monitoring these exposures throughout the policy period will help avoid surprises and positions you as a proactive agent. Now, own the renewal timeline. A structured, timely renewal strategy gives you time to market the account, address issues, and defend against competing brokers. So don't leave it to the last minute. Renewal retention starts months in advance. And then educating clients on the audit process. Workers' comp audits can frustrate clients, especially if they're unprepared, which is typically the case. So you want to set expectations early, help gather proper documentation, and use audits as a chance to reinforce your value. The bottom line is to win and retain more workers' comp business, by elevating your process. So underwriting with intention, communicating clearly, and managing the policy lifecycle from quote to audit. The brokers who master these steps become the go-to resource for clients and the preferred partner for carriers. So now we're going to dive into the workers' comp lifestyle case study, which is going to be a food service exposure. So when reviewing workers' comp risks, like for instance, this insured's name is Fork and Flame Kitchen. It's a fast casual restaurant. Attention to underwriting details will be the key difference between a smooth market submission, a stalled quote, or worse, a declined risk. So this account falls under class code 9083. It's a fast food, fast casual restaurant with an annual payroll of $520,000. $520,000 payroll in a restaurant likely suggests a moderate-sized operation. So as I'm sure you are aware, food service in California has now split into 6 different classifications. So understanding the business operations in order to properly classify the risk is extra important. Fork and Flame operates multiple locations, introducing additional complexity. Multi-location exposures require address verification, clear employee count per site, and possibly different risk profiles by location. Failure to account for this can lead to audit discrepancies or underpricing. For instance, one location could be a fast casual restaurant and the other can be a food truck, which would fall into a different class of business. So knowing to ask these additional questions are going to differentiate yourself from another broker. The restaurant uses PPE, which is critical to loss prevention and helps strengthen the submission narrative. These elements, they may not reduce the manual rate, but they can help make a case for more favorable pricing or acceptance with preferred carriers. The insured also has an XMOD rating of 120%, indicating claims history. So providing the carrier with that PPE utilized, it can help the insured's case that they're taking preventative measures. And then on the flip side, when you're presenting the quote to the insured, you can also offer loss control services if the carrier offers them, another strategy in helping secure the bind. Of particular concern, there is a 3-week lapse in coverage due to non-payment. So even short gaps, they can raise red flags for underwriters. It could impact appetite or may trigger higher pricing. Um, CID, however, is a market for businesses with lapse in coverage, so we can help you with those harder to place risks. A lot of times carriers will just require a signed no known loss letter. So in today's market where work comp is becoming increasingly selective, knowing what to look for and how to present it can set you apart. So in this slide, I just wanted to highlight some of the key underwriting things. Being thorough with exposure details, class code verification, safety programs, and coverage history. It doesn't just help you get the quotes, but it positions you as a more knowledgeable and reliable agent in the eyes of both the clients and the underwriters, enabling you to bind more business. So by getting to know the business, using my underwriting knowledge, showcasing extra carrier services like that loss control, and telling the insured story the right way, I was able to hit the bind request in 3 days, proving how being prepared and proactive can make all the difference. As brokers, our job doesn't just end after binding a policy. In this slide, we're going to go over some policy period changes and exposures, applying them to our case study. So for example, our risk fork and flame kitchen, ongoing policy management, it's going to be critical to protecting the client, avoiding surprises at audit, and maintaining strong relationships with both the insured and carrier. So these are 3 often overlooked areas that can make or break a work comp risk midterm. Midterm payroll adjustments, such as new hires, wage increases, or layoffs, shows that you're actively managing the account. So touching base with the insured maybe once a quarter to see if anything has been updated. If there have been any payroll changes, so you can update the policy accordingly instead of being caught at audit. Location modifications. The case study, it operates as multi-location businesses, which introduces some more complexity into underwriting and class. So if the insured opens a new restaurant or closes an existing one midterm, or if staffing allocations shift between locations, the policy should reflect that as soon as possible. And then ownership or entity changes. In the restaurant industry, particularly ownership transitions or restructuring, maybe from a sole proprietor to an LLC or adding partners, is common, especially if the brand scales. So when a business undergoes an ownership or entity change, it is crucial to notify the underwriter and the carrier immediately. So that way there isn't any issues at the time of the final audit. And then we're going into the renewal process. So managing the work comp renewal, it isn't about just getting a quote, but showing your client that you understand the business, anticipate their needs, and advocate for them in the market. So starting a full review of the account, typically 60 days before the renewal, gives you enough time needed to catch potential issues, avoid any last minute surprises, and puts your client in the best possible position with underwriters. For our case study, we would be verifying payroll and updating it if there are any staffing changes or expansions, reviewing the class codes to make sure they're all still accurate, especially if there were new locations. Evaluating market opportunities with eligible carriers presents both risk and opportunity. So for our case study, the prior lapse in multi-location setup, it may turn off some markets, but the use of PPE and potential for payroll growth makes it attractive to others. Not every renewal is worth remarketing, but showing the client that you're at least evaluating options, even if you do stay with the same carrier, it's going to build trust and demonstrates your advocacy for them. Fork and Flame, it's already using important safety controls. However, carriers are more willing to compete on price when they see that the insured is serious about preventing injuries. So highlighting safety measures can lower perceived risk and help secure better terms. And then a thorough review shows the market that you're organized and informed, which can result in more favorable underwriting terms, smoother processing, and fewer back and forths. And always remember the audit. Audits are going to be one of the most frustrating and things for the insured and sometimes costly surprises for business owners, especially in industries such as restaurants where payroll and staffing fluctuate throughout the year. So that's why it's really important to touch base with the insured, once a month, once a quarter, whatever your process is, making sure that the policy is accurately shown. And then one key area is to monitor the difference between voluntary audit, where the insured submits payroll records via email, or physical audits, where either a phone a conversation or an in-person meeting is set up between the auditor and the insured. For our case study, it could be subject to either, depending on its complexity and claims history. Another often overlooked area is the use of owner-officer exclusion forms, which will affect the audit. Exclusion forms must be submitted at the time of binding the policy. That's why it's really important to make sure you're satisfying the binding requirements, as carriers do not backdate an exclusion form. Or if, in the case an exclusion form's never provided to the carrier, those owners are going to be unexpectedly included in the payroll at audit, resulting in higher final premium. And then finally, one of the most costly mistakes a client can make is allowing an audit to become non-compliant or estimated. So if our case study Fork and Flame fails to submit the necessary records or ignores audit requests, the carrier is likely going to issue an estimated or non-compliant audit, often based on inflated assumptions. I see these daily, these non-compliant audits getting issued by our carriers, and the surge charge, it could be anywhere from like $6,000 to $15,000. This can cause severe financial strain, billing issues, and it can even lead to policy cancellation. So as a broker, it's really important to keep the client on track, sending reminders, offering guidance on documentation, and helping them understand the potential financial impact of not complying with audit requirements. As I mentioned, the food service industry in California has broken out the types of services into 6 classes of business. So I just wanted to briefly go over them with you. 90/80, it's going to be full service restaurants with wait staff, table service, tips are received by waiters, and food is typically paid after consumption. Class code 9083, which was our case study, it's those fast casual restaurants or franchise locations, maybe like a McDonald's or a taco shop, where you pay before eating and your order is taken at the counter or through the drive-through window. 9084, bars and taverns are classified when they hold a liquor license and minors are not allowed inside. 9081 is those not other classified risks where you can't really, it's maybe the donut shop or a food truck or hot food served inside a grocery store. 9058 is hotel and motel food and beverage employees. They could be preparing like the hotel, restaurant, or bar, setting up continental breakfast, and providing room service or restocking room refrigerators. And then 9082 are the caterers, hired to provide food and beverage for a specific event. Food is typically prepared in advance of the event, may have employees load, unload, or transport items. So when you do have a food service risk that comes across your desk, just making sure that you're accurately classifying the risk if it is in California, since it is now broken out into these 6 classifications. In today's workers' comp market, strategic class selection is more critical than ever, and carriers are tightening underwriting and are becoming more selective due to rising claims and industry trends. So brokers who focus on the stable, profitable classes are best positioned for long-term growth and retention. So these are some of the classes of business I wanted to highlight that we're seeing being competitive amongst our markets. By focusing on these stable growth-oriented classes, businesses, typically with good underwriting profiles. You can build a more profitable book, reduce placement headaches, and keep carrier relationships strong. So, in a market with rising claims and tighter guidelines, this strategic approach is going to set you apart from other brokers. So, these are some classes of business that our agency CID specializes in, but are also doing really well amongst all of our markets. And some lifestyle takeaways. Um, To truly thrive in this space, brokers must manage the full life cycle, not just bind and renew a policy. Small changes can create big problems, so be in constant communication with the insured. Treat renewals like new business, as you should never assume the risk or market conditions are the same as last year. And remember, the policy isn't over until the audit is completed. Together, these strategies not only help agents grow their work comp book, but also transforms it into a sustainable referral generating engine. So mastery in quoting, service, and value delivers and solidifies your role as a vital partner in your client's risk management strategies, paving the way for long-term growth and agency success. And at the end of the day, brokers who can adapt and evolve are going to stand out in this market, and we're here to help you just do that. So I'm going to pass it over to Jacob, but I appreciate you all for taking the time today with me.
All right. Thank you, Darby. If anyone has any questions that weren't answered during the webinar, now's the time to chat them in so we can answer them before we sign off. And then after we do sign off, I encourage you all to browse our website at cidinsurance.com. We have tons of tools for you in your office to use, including marketing materials, proposal templates. We have our fillable applications there and a ton of recorded and upcoming webinars on different lines of business and coverages. And don't hesitate to reach out to Darby after the webinar. Her contact information is on the screen here. She'd be happy to answer any questions you have. And if you have completed applications on file, you can start sending them over to the submissions email that you see on screen. So Darby, looks like there is one question that came in for you.
Okay, so a question from Diane: when client chooses monthly reporting, does that take care of reporting midterm changes? Yes, it does. In regards to payroll, of course, if there are ownership or entity changes or location changes, it's still good practice to let your underwriter know, just to ensure those changes are also made. Let's say if it's an entity or ownership change, that would also need to be reported to the state and the WCIRB if it's a California risk. So there's a couple more steps in place for the process, but the monthly reporting definitely is a great option for businesses that have payroll fluctuating quite often. That way it is always most accurate on the policy.
Perfect. All right. I don't see any other questions. Doesn't look like anyone is typing in the chat. So I think that'll do it for today's webinar. We appreciate you all joining us, and we look forward to doing business with you. Have a great day.
Thank you.